Yo, what is good, YouTube? We're back with another video. I did not upload anything last week because I just took the week off. It was the last week of February. Markets were pretty boring, to be honest. I did take a trade on Friday, however, and today's video is going to basically just be going over important fair value gaps that you should be looking at so you can get an idea of what fair value gaps should hold versus which fair value gaps are not going to hold, right? And this in turn will help you find the draw on liquidity, which will be the next video that I release on Wednesday. And yeah, that's pretty much it. And yeah, I just didn't feel like recording any videos last week. I ran out of ideas, so I took the week off, and then this weekend I just planned out all the videos I want to make for this month, and now here we are, right? So we're just going to hop into this. We're going to go over what happened on Friday, what fair value gaps you should have been looking at, which ones you shouldn't have been looking at, right? So starting off the day, right, we have 9:30 open right here. Right, so the ones you want to be looking at are fair value gaps that break above highs and fair value gaps that displace below lows, right? It's that simple. So whenever we have a fair value gap that, let's just look for one, like right here, right? This doesn't have like a important high. Yes, we do have a high right here, but I'm saying like a high like this, like a low like this, or a high up here, not just this little swing high here, right? So you guys understand what I'm trying to say there. This was just something that I saw pop out right here. That's why this one is not really respected, right? And as you guys see here, we're just kind of ranging. So this fair value gap on the bullish side isn't one I'd be too important, right? I wouldn't be looking at it too hard. Also, we create these relative equal lows, right? So which ones do you want to be looking at, right? So starting off the day here at 9:30, what do we have? We have a straight dump lower taking out all this sell side. So let's go down to the 1 minute chart to see if we had a fair value gap. No, none of these I'd be looking at. None of these. So yeah, not really any. That's why I didn't have a long, right? I didn't take a long on Friday. Right here's one, right? It breaks above these highs, closes above these highs, so you'd expect this fair value gap to hold. But we can just go to the 5 minute, right, and take a look right here, right? So which one of these fair value gaps would you expect to hold? It'd be the lower one, right? It's because this lower one broke above all these highs with displacement, right? Now, the NQ did not come sweep this high. The ES did come up and take out this high, right? If we go to the ES, we can see right here, we form that SMT right there, right? You guys see this high right here is this one on the NQ, and the ES takes this high. So that'd be your sign to say, hey, let's take this position off on the NQ, right? Now, on the bearish side, right, we can take a look at the trade that I took, right? Now, why did I short in here, right? I went down to the 15-second chart and shorted it on this fair value gap. Why was my eyes on this imbalance right here, right? It's because we broke under this low with this fair value gap. Yes, we did not close below this low, but we had an SMT up here, right? That is another key indicator to show you if we are going to keep going lower, we should respect this fair value gap, right? We come up, we tap into it, and we come down and we take this low. Now, I did not get full TP because we didn't take this low right here, right? Now, we did paint outside of these lines, right? We do close some bodies up through here. So it is a little iffy, but it was a Friday, and then we did deliver lower. Now, would you be looking, what fair value gap would you be looking at throughout here? This one or this one, right? It'd be this one. Now, you guys see right here, we do respect it, but then we keep going higher. Now we have an SMT down here at this low, right? And what fair value gap breaks above these highs right here? This one down here. So this one should be the one that gets respected, right? Comes down into this one, right? It doesn't respect this fair value gap. Sorry, I couldn't think of the word I was about to say, does not respect this imbalance because this is not the one that broke above the highs, right? And then we continue higher. Now, if we go to the 15 minute, we can see we have this imbalance right here, but it can remain a breakaway because this candle closed above this high, right? Now, if we go back down to the, we can actually go down to the 1 minute here because we sweep a low, right? So right here, we sweep this low. Now, what do we expect throughout here? Fair value gaps that break above highs, right? Right here. There's not really any throughout here that breaks above a high. This one right here breaks above these highs, respected. This one right here breaks above these candles' highs, respected, right? And then as you see, we eventually close out the day, right? So you guys see just with this, which ones you can tell should be respected and which ones shouldn't be respected, right? This one right here, we didn't break beneath a important swing low, right? So we don't respect it. We respect this lower one, right? So let's go to this day. Let's go to the 5 so I can get an idea of what this is. All right. So if we go to the hourly, what are we doing here? Okay. So we come up, we probably form an SMT there. All right. 9:30, where are you? Right here. 9:30. Oh yeah, we make an SMT somewhere with these highs throughout here. Okay. So we displace lower, and then right here. What happens here? We break beneath a swing low with a fair value gap. It should be respected. Continue lower, right? Now, do we form an SMT down here? I'm not sure if we do. No, we don't. Okay. We sweep out this low, which is a previous hourly low, right? So you can use CRT here, right? So we come down, sweep this low, change in delivery. Now, which fair value gap breaks above the highs, right? It's this one right here. Bodies respect, wicks through the damage, right? And if we go to the 15, fair value gap that broke above a high, this should be respected, right? Now, if we go down to the 1 minute, what fair value gap throughout here breaks above highs? This one right here. Respected, which one throughout here breaks above a high? This one right here. Respected, right? These don't break above a high, so they can be, right, painted outside. What breaks above a high? This one right here. What breaks above a high? This one right here. Right? And then, honestly, I don't know what else we do throughout here. Okay, let's see if this pushes us lower, right? What fair value gap broke below lows here? This 15 minute, right? This one didn't. This one did. So let's see what we do here. Huh. Okay, so let's go to the 1 minute, right? That 15 minute broke below a low, right? So let's remove all these bullish ones that I showed you guys. All right, so what fair value gap here breaks below lows? Oh, we don't actually tap into this one, right? This one does, but we don't tap into it, right? We respect this one, right? Now, we break below here with this imbalance here. It gets disrespected. Wonder what happens on the ES here. We actually don't even form an SMT. There has to be a 5 minute here. Ew. That's actually pretty gross. Closes above. Ew. Alright. Well, if you would have took it here, you would have obviously been stopped out. Right? And then honestly, after this gets ran, I wouldn't even see a point in shorting anymore. Right? And then you guys see we do fade off, but I wouldn't even have been interested in shorts after this is disrespected, and especially after this 5 minutes disrespected. Right? After this is disrespected, I really wouldn't even be interested in anything. Huh. Well, closes right here, and we kind of just chop out, right? We come straight up, straight down. So, we probably make an SMT there, don't we? Yeah, we do make an SMT right here. Right? But you guys see how that 15 minute on the bearish side held us to go a little bit lower, right? We break beneath this low here. So this should be the one, if we are going to continue to go bearish, that gets respected for the day, right? And then you guys saw how you can frame a 1 hour CRT. Let's actually go to the 1 hour right there, right? Hourly swing low, or not a swing low, hourly candles range right here gets taken. Go to the 5 minute, change in delivery, a 5 minute fair value gap that broke above a high, right? And we haven't hit that hourly CRT yet. Takes out all these lows, fair value gap that broke above a high. You can long here, stop down here, target up here. Boom, right? So you guys see how the fair value gaps that break above highs, and like after this gets formed, I'd expect a 5 minute rebalance, right? Because you have to be taking in consideration the other time frames, not just the 1 minute, right? That's why these aren't respected as well as that 5 minute. Right, now let's do, what is this? 930 is right here. We sweep out this high. Okay, let's go to the 1 minute. Okay. Oh, there's actually no fair value gap here except this here. Okay. Well, let's just take a look on this 1 minute. Let's actually go to the 5. No, this one, but it doesn't really break above a important high until here, right? This is a nice swing high that we displace above. So this should be respected, right? This should be respected, right? And it is. And then we create these equal highs here, come back down. If we create equal highs like this, we probably form an SMT, so you would take partials there. Right here. Oh, yeah. Yeah, there was a big SMT there. Right, so right here, we don't close above this high, so that doesn't need to be respected. We close above this high, and this is the only imbalance in the picture, right? Close above the high, only imbalance in the picture, right? And then do we continue up? Nope, right? But as you guys see, it's respected. You can get your entry on the 15-second, and then have your partial here, and then right here, right? We take it out right there. Okay, so let's go down to the 1 minute, because everybody likes, that's a straight V-shaped recovery, so that kind of sucks. Let's go over here, right? Fair value gap that breaks above a high. I mean, kind of, right? But this is an important high. So what should be respected? This one. Paint outside the lines a little bit. Take this swing low. What fair value gap here breaks through the highs? This one here. What fair value gap breaks above the highs? This one here, right? And then we create those equal highs right here. Now here, it's just straight V shape. You can't really do anything about that. Okay, so which one breaks above the highs? This one here, right? Respected, and you kind of get a little grind there, and then 3 p.m. opens up, and then we dump lower, right? What fair value gap breaks below the low? This one here. Kind of paints outside, takes out this swing high here, and then displaces lower, right? But as you guys see, the ones that break above highs and the ones that break below lows are the important fair value gaps that you should be looking out for. Now, this is going to, for the next video, help you find the draw on liquidity, right? And that's going to be the next video, right? Imbalance, right? We're going to be going over how to find the draw on liquidity, right? Is it a fair value gap? Is it a high? Is it a low? That's what we're going to be looking at in the next video. So, yeah, I'll be uploading Monday, Wednesday, and Fridays again this week, or this month, sorry. So, yeah, I'll see you guys in Wednesday's video. Peace.